Joining me now for a look at the equity scene is Martin Smith from Anchor Capital. Martin, thanks so much for your time this afternoon. So second week of trade for the month of June. Many seem to be focused on the upcoming US-China trade talks taking place in the UK today. Will we be seeing a more cautious approach when it comes to financial markets until we get something out of that meeting, something that alludes to positivity when it comes to those trade talks?
Yeah, I think so. I think we might see global markets kind of treading water this week. Obviously, a very positive kind of end to last week on the back of those employment numbers, and I think some of the bulls are looking towards stimulus. They're looking through valuation. They maybe think that tariff talks might end positively. So I think the bull's definitely winning at the moment. I think I said to a colleague of mine the other day, I just wish I could enjoy this bull market because it just still feels very uncomfortable. But I think we'll still be in a little bit of choppy territory at least this week until we've got a little bit more clarity on kind of the underlyings and those other talks. So again, it feels uncomfortable, but for now, things have been a bit stronger.
Yeah. And you know, from many of the analysts I've been speaking to, it seems like one thing we can be certain about is uncertainty, Martin. And you touched on the jobs numbers, right? While they did beat expectations, we are seeing that hiring is slowing in the US. Is this not a cause of concern, considering the numbers we also got last week, including the ADP numbers as well as the jobless claims numbers?
I think it depends if you President Trump or if you are the Fed. I mean, Mr. Trump would say, or President Trump would say that this is calls for a 1% cut. I know he's been very, very vocal about pushing Mr. Powell to cut a bit further, but I think the market probably saw it as an overall positive. I mean, you saw nice rotation out of kind of safe haven assets, and you saw the market kind of pick its head up after those numbers came out. And probably, if you look at it kind of rationally, I think it justifies the Fed's position on kind of wait and see type of approach. But you definitely are right, definitely slowing down, even though it was still a beat. So, I mean, it's going to be a very interesting kind of second half of the year and see how much of the stuff we've seen in the first half is going to impact that. And if we are going to see kind of recession or a real slowdown, I think it's anyone's guess at the moment. But for now, I think, like I said, positivity is winning the game, I think.
So I guess everyone is just crossing fingers and toes that the Fed does something pretty soon. Let's get into some company news out today. Forbes delivering double-digit earnings growth boosted by an increase in operating income market. The group even declared a special dividend. It was interesting to see the share price movement when those results came out. At the top of the day in the morning, we did see the share price down over 1%. I'm looking at it now, it's up 2%. Would you say that markets welcoming these numbers?
Look, I think we have to also maybe kind of rewind a couple of weeks when we got those, the trading statement for these numbers, because this was a great set of numbers, kind of double digits positively across the board. But we did have that trading update a couple of weeks ago where I think a lot of the good news was priced in. So I think the share price up around about 20% on the back of those numbers. So the market was kind of fairly well informed as to what to expect today. And I think that's maybe why you haven't seen this big jump after a very good set of numbers. Obviously, it is also a very tightly held business from a free float perspective. About 85% of the shares on the free float are held by 3 entities. So you've got to kind of take the liquidity profile into consideration as well. But like I said, overall, very good set of numbers. And I think if you're Alex Forbes shareholder in the last couple of months, I think you'd be very happy.
And let's take a look at Omnia. Those shareholders also have a reason to smile, Martin, with the company also declaring a special dividend. Seems like a mixed showing from that group where we are seeing, the mining explosives division doing quite well. We're seeing some struggles in the agri sector, taking into account the bad weather conditions, and that chemicals unit also battling. Is this a company you watch closely, and are you positive about Omnia actually getting that unit restructured and poised for growth yet again?
Yeah, so I mean, I think the way that you put it there at the beginning, mixed, I think is the best way to describe describe these results. And you mentioned there about the dividend and the special dividend. So you've got a 9% yield overall, which is obviously very positive. But like you said, you've got some divisions doing well and some divisions maybe dragging a little bit. Specifically, like you mentioned, the chemicals one, which are really looking to kind of restructure. Another positivity is the cash on balance sheet, I think about 1.8 billion, if I'm not mistaken, which is obviously quite positive from that perspective. So it just depends how they can kind of restructure and kind of find the next step of growth. Because from here, like you said, revenue up a little bit, HEPS up a little bit, nothing kind of super positive or super bullish, but let's see where they go from here. Like I said, the balance sheet still looks really good, and at least shareholders got a very, very good dividend if you include the special.
All right, and talking about turnaround strategies, restructuring, that's what we've been seeing playing out in PPC, and there those cost-cutting initiatives gave it a boost. Revenue still under pressure, but we are seeing HEPS jumping. They are still dealing with a tough market, to be quite honest. Is this a story you believe in, Martin?
No, I think you're so right. It is a very, very tough market. I mean, you've got a huge oversupply and maybe demand not kind of keeping up with that. So just already the kind of macro picture or the macro backdrop isn't exactly great for them. Trading at a 9x multiple. So you put those two things into kind of consideration. I'm not massively bullish on the story, but they have done well, like you mentioned, from a margin perspective. And I think the next step, which is a year or two or three away, and I think you mentioned at the beginning of the show, is that low carbon kiln of theirs that needs to kind of come on board. And that'll kind of be the next ramp up for them. So I think a lot of the things that have played out in the short term have played out well for them. And you've seen the share price bounce about 20% in the last couple of months. But it's about that next step and can they do it against a very difficult backdrop.
Yeah, that's right, Martin. Let's hit pause on the conversation before we move on to your stock pick. Let's take a moment to touch on some counters that have been attracting interest from your industry peers.
The Hong Kong listed sports retailer, Enter Sports, and it's actually one of the largest sports manufacturers in the world. Not necessarily well known as a company, but some of the brands are pretty well known and loved, like Salomon, Wilson, and Fila. I think what's really compelling is it's a dominant player in the Chinese market. They've got about a quarter of market share there. And you've got to remember that's an economy that's growing along at 5%. So, there's an inherent growth there. They've got a really strong e-commerce platform, as you would expect in a market like China. And yeah, just a really strong company from a financial perspective, ungeared balance sheet, and commands significant margins, particularly on the e-commerce platform. So yeah, one we like, and yeah, one we're watching closely.
I like Mr. Price. That's my stock pick today. I think there's enough in those earnings to suggest if you take a 12 to 18 month view, it still looks quite cheap, especially if we see further rate cuts, which I think we will. If we see further real wage growth, which I think we will, and we have, and you see this sort of unwinding of negative sentiment globally over time, you're going to find these stocks are going to offer attractive returns. So I think it's a good business, it's in the right place, and it offers attractive upside. So that would be Mr. Price.
Grant going with a local counter, Mr. Price, and Devin picking Enter Sports, a Chinese-based company. Just your analysis on those counters.
I like both of them. I mean, the Chinese consumer recovery is definitely one that we believe in. The brands that I mentioned are very strong, and you've got this e-commerce side of the business also really coming through. So I'm all about, like I said, the Chinese kind of recovery from a consumer perspective, and likewise South Africa, the Mr. Price side of things. The SA consumer has been very resilient against a very tough backdrop in the last few years. And as we see interest rates come down, and again, the SA Inc. side of things does look a little bit cheap in relation to the comment that was made. I agree with that. So I think we could see a little bit of a catch up there. So yeah, I'm in agreement with both. I think they both look like good stories.
One thing's for sure about the SA consumer, we will buy a new outfit, okay? Let's get your stock pick. Where are you seeing opportunity?
So we've been adding to Uber in the last couple of weeks. We think that it's at somewhat of an inflection point. We think that it's going to really start to become nicely cash flow generative. We think it's going to become the platform in mobility. And I think there's a bit of negativity around it insofar as the threats of autonomous vehicles, all of those things, which we think is maybe slightly overplayed. So I think it's a leader in the space, and I think one that can offer returns in a tricky offshore market that's a little bit overpriced at the index level. So yeah, Uber.
Uber, one to look out for. Martin, thanks so much for your time and joining us for our market analysis at midday. That was Martin Smith from Anchor Capital.